Barclays have joined the list of banks seeing profits plunge. They still have profits though. Richard Scott's here with that.
Thanks, Evan. Yes, Barclays has announced that profits in the first half slid to £2.8 billion, down from £4.1 billion a year ago. It also wrote off £1.1 billion in bad debt linked to the credit crunch and the investments there. That's on top of the £1.7 billion of losses it's already reported this year. Well, James Edsberg is a banking analyst at the consultancy Lighthouse Global. So, a big fall in profits, another £1 billion written off stemming from the credit crunch and investments there, but still £2.8 billion in profits.
That's right. The business is weathering what's been a very difficult year for the whole of the banking sector. And as you've just mentioned, the sort of dynamo for growth for Barclays in recent times has been Barclays Capital. That's their capital markets division. And this was where Barclays was most exposed to US mortgage-backed securities. And within the results that have just been announced, that is principally where the losses have fallen and where they're having the toughest time. And that is in line with what people were expecting.
And the chief executive, John Varley, he's warning that for the foreseeable future, it will still be tough. I mean, foreseeable future is, well, that's potentially quite a big period as the economy's slow, and that means presumably we'll continue to see profits fall or stay stable.
Yes, I mean, there's two things happening here. The first is, a year on from when we first became familiar with the whole term of subprime. The big question that still remains is that the quantity or the extent of the exposure of those banks that invested in or traded in these instruments is still not entirely clear, and that's because the full extent of the kind of rottenness of these loans in the US is not clear. Yesterday, Freddie Mac, which is the company, the government-backed company in the States, which underpins a lot of the mortgages in the States, announced some pretty dire expectations for the US housing market, and that will have an impact on other banks that have been exposed to this. So yes, a tough time ahead in that respect. And secondly, of course, we're heading into tougher times for the UK economy and European economies, and what you need to look out for is the degree to which, for example, commercial loans made to businesses begin to go bad as companies across Europe face tougher times.
Now, Barclays has been criticised for perhaps sounding a bit more upbeat than it was due to sound by some analysts. Do you think we're going to see more write-downs in the future from them?
I think that is very much the question on analysts' minds this morning and going forward. What Barclays have been doing is what all the other banks have done, which is to get the bad news out there relating to their US losses, and to, in the recent placement that they did, raise capital to strengthen the balance sheet. The difference with Barclays is that they have been a little less assertive than other banks in marking down their distressed assets, and they haven't raised quite as much capital. Their Tier 1 equity capital is a little under what other banks have raised.
Okay, James Edsberg, who's a banking analyst at the consultancy Lighthouse Global, thank you.